Let me tell you something crazy. Two people can make the same amount of money, but one keeps millions more over their lifetime. Why? Because one understands taxes, and the other says, my accountant will handle it. And listen, taxes are not just something you pay, they're something you plan. Rich people don't just earn more, they strategize more. And today, I'm going to show you the exact tax mistakes wealthy people avoid in simple, friendly English, so you can stop giving unnecessary tips to the government. Let's fix your money leaks. Mistake number 1, waiting until tax season to think about taxes. Most people think about taxes in March or April. Wealthy people think about taxes in January and February and every single month. Let me tell you a quick story. Meet Adam. Adam makes $120,000 a year. He works hard, he invests a little, but he only talks to his accountant once a year. When tax season comes, he says, "Wow, I owe that much." Now meet Sarah. Sarah makes the same amount, but in January she sits down and says, "What deductions can I plan for? Should I increase retirement contributions? Should I adjust investments for tax efficiency?" By December, Sarah already knows what her tax bill will look like. No surprises. D. Wealthy people treat taxes as a year-round strategy, not a yearly emergency. At the start of each year, plan your tax strategy. Even a 30-minute review can save thousands. Mistake number 2, not using tax-advantaged accounts. Rich people love tax-advantaged accounts. Why? Because taxes compound, just like investments do. Let's say you invest $10,000 and earn 8% annually. Sounds good, right? But if you're paying taxes every year on gains, your growth slows down. Now imagine that same investment inside a tax-advantaged account, like retirement accounts, health savings accounts, certain education savings plans. Now your money grows without being eaten every year. That difference over 20 to 30 years? Huge. Think of taxes like a tiny leak in your water tank. A drip today seems small, but over 30 years? Flood damage. D. Wealthy people plug the leak early. Max out tax-advantaged accounts before investing in regular taxable accounts whenever possible. Mistake number 3, ignoring capital gains strategy. Let's talk investments. When you sell an asset, like stocks or real estate, you may owe capital gains tax. But here's where the wealthy are clever. They don't just sell randomly. They ask, how long have I held this asset? Is it short-term or long-term gains? Can I offset gains with losses? There's something called tax loss harvesting. Imagine you made $5,000 profit on one investment, but you also have another investment sitting at a $3,000 loss. If you sell both strategically, you might only pay tax on $2,000 net gain. Most people ignore this. Wealthy investors track this carefully. It's not about avoiding taxes illegally. It's about understanding the rules and using them wisely. Before selling any investment, check the tax impact first. Timing matters. Mistake number 4, not structuring income properly. Now, this one is big. High earners don't just focus on how much they make, they focus on how they make it. Salary income is often taxed higher than business income, dividend income, long-term capital gains. Now, I'm not saying quit your job tomorrow, but many wealthy individuals start side businesses, create investment income, build multiple income streams. Why? Because different income types have different tax treatments. Over time, this flexibility can reduce overall tax burden. Imagine 2 people earning $200,000. One earns it all as salary. The other earns $120,000 salary, $50,000 dividends, $30,000 long-term gains. Their tax situation could look very different. D. The wealthy design income. Most people just accept it. Think about building at least one income stream outside pure salary. Mistake number 5, forgetting about estate planning. Now, this one is not fun to talk about, but wealthy people think long-term. If you build assets, investments, property, business, what happens when you pass them on? Without planning, heirs may face heavy taxes, assets may be frozen, family conflict can happen. With proper planning, assets transfer efficiently, taxes can be minimized, wealth continues growing across generations. Rich families don't just build wealth, they protect it. Even if you're not rich yet, planning early matters. Estate planning is not about being old, it's about being responsible. Have a basic will,
Understand how your assets transfer. Review beneficiaries regularly. Mistake number 6, trying to wing it without advice. Now here's something funny. People will research for 3 hours before buying a phone, but won't spend 1 hour learning about taxes on a 6-figure income. Wealthy individuals don't guess. They consult tax professionals, financial advisors, estate planners. And here's the secret. The goal isn't just saving money this year, it's building a long-term tax-efficient strategy. Sometimes paying for smart advice saves you far more than it costs. Think of it like hiring a trainer at the gym. Yes, you could guess your workout, but if you want results faster and safer, you get guidance. Same with money. Quick recap. Last 30 to 60 seconds. All right, let's lock this in. Rich people avoid these common tax mistakes. They plan taxes year-round, not just during tax season. They maximize tax-advantaged accounts. They strategically manage capital gains and losses. They structure income intelligently. They plan estates early. They get professional guidance instead of guessing. Here's the big idea. Wealth isn't just about earning more, it's about keeping more. Taxes are one of the biggest expenses of your life, and if you ignore them, they quietly eat your future. But if you understand them, they become a tool. Friendly call to action. If this helped you think differently about money, hit that like button so I know you're serious about building real wealth. Subscribe if you want more simple, powerful money strategies. And if you want to level up even more, check out the next videos. Until next time, stay smart and stay safe.